Welcome to Chain Train, your go-to source for the latest in crypto. Today we cover a massive $1.5 billion in crypto hack losses, Trump's controversial US crypto reserve, and the SEC dropping its lawsuit against Kraken. Plus, we dive into Bitcoin's energy debate, major scams, and market turbulence. Is crypto at a turning point, or are we heading for more chaos? Stay tuned. Crypto hacks have surged past $1.5 billion, with Bybit losing $1.4 billion in a March 3rd 30K report. Security experts blame weak bug bounty programs, urging exchanges to offer higher rewards to ethical hackers. Bybit's bug bounty excluded key security flaws, allowing attackers to exploit an out-of-scope vulnerability. Experts argue that paying white hats more upfront is cheaper than post-hack rewards. 30K recommends air-gapped signing, stricter authentication, and real-time monitoring to prevent future attacks. The Bybit hack stemmed from phishing, while Infini's $49 million loss was due to a private key leak, highlighting risks of blind signing and weak transaction verification. Trump announced a US crypto reserve to buy Bitcoin, Ethereum, XRP, Solana, and Cardano, temporarily boosting crypto prices after a sharp decline. He claimed this move would counter Biden's anti-crypto policies and make the US the crypto capital of the world. Critics argue the plan benefits wealthy crypto investors, pointing to White House crypto czar David Sacks's ties to Solana and venture firm Craft Ventures, which holds the same 5 cryptocurrencies. Sacks denies conflicts of interest. The initiative remains vague, raising concerns about taxpayer funds, potentially propping up crypto markets. Meanwhile, the market rally was short-lived, with prices falling back to pre-announcement levels. Bitcoin mining consumes 162 TWh annually, comparable to Poland's energy use, raising concerns over its environmental impact. Crypto's water and carbon footprints are massive, making it a challenge for ESG-focused investors. Efforts to green crypto include carbon offsets, renewable energy sources, hydro, wind, solar, and energy-efficient consensus mechanisms like proof of stake. Ethereum's PoS transition cut energy use by 99.5%, while Tezos, Cardano, and others also use PoS. Innovations like Layer 2 solutions, Lightning Network optimistic rollups, and sharding further improve sustainability. Bitcoin mining in Canada and Iceland increasingly relies on renewables. The Pi network pioneers low-energy smartphone mining, appealing to eco-conscious investors. While challenges remain sustainable, crypto is becoming a reality. An Ontarian lost $215,000 in a cryptocurrency scam after receiving a fraudulent utilities bill with an inflated charge. The victim contacted a supposed company representative who claimed a processing error and instructed them to make crypto transactions to fix it. The South Bruce OPP is investigating, warning residents to be cautious with digital currency transactions. Scammers often use fake documents with real company logos to trick victims into sharing personal and banking information. Authorities advise verifying suspicious bills by contacting the company directly using official contact details. Anyone with information is urged to reach out to police. Kraken announced that the US SEC agreed to dismiss its lawsuit accusing the exchange of operating as an unregistered securities exchange. Kraken called this a turning point for crypto, criticizing the lawsuit as politically motivated under the Biden administration. The dismissal includes no admission of wrongdoing, no penalties, and no changes to Kraken's business, and is with prejudice, preventing the SEC from reopening the case. The SEC had sued Kraken in November 2023, claiming it ignored securities laws and lacked proper internal controls. However, since Trump's return to office, the SEC has softened its stance on crypto, also dropping cases against Coinbase and Justin Sun. Trump nominated Paul Atkins, a pro-crypto lawyer, as SEC chair. Kraken remains a top 10 crypto exchange globally based on trading volumes and liquidity. David Sacks, Trump's AI and crypto czar, confirmed he sold all his crypto holdings, BTC ETH before taking office to avoid conflicts of interest. He also denied claims of indirect holdings through Bitcoin ETFs, stating he sold his $74K Bitwise ETF position on January 22nd and would update after the ethics process. Meanwhile, Trump announced the creation of a US crypto strategic reserve, including Bitcoin, Ethereum, XRP, Solana, and ADA, causing a market surge. Bitcoin jumped from $86K to $93K, while other selected cryptos rose 8%, 20%. Trump's executive order in January set the groundwork for the reserve, aiming to make the US the crypto capital of the world. Bitcoin fell to $85,321 on March 3rd, later dropping to $83,165 on March 4th, as crypto markets plunged due to fears of a trade war and uncertainty over Trump's US crypto reserve. Ether dropped 15%, while XRP, Cardano, and Solana fell nearly 20%. Initially, crypto surged after Trump proposed a national strategic crypto reserve, but doubts over congressional approval triggered a sell-off. Analysts noted investors bought in, then questioned feasibility. Adding pressure, Trump confirmed 25% tariffs on Mexican and Canadian imports, sparking fears of retaliation and economic slowdown. Coinbase CEO Brian Armstrong suggested a Bitcoin-only reserve as the simplest approach, likening it to gold. A cryptocurrency scam in Assam's South Salmara defrauded over 2,000 victims, causing losses of Rs 10, Rs 20 crore, police confirmed on March 2nd. The scheme revolved around the RSN crypto token, where victims were promised high returns. Instead of delivering profits, the fraudsters converted investments into USDT, Tether, via Chinese exchanges, laundering the money and leaving investors with losses. 3 people have been arrested and investigations are ongoing. That's it for today on Chain Train. From billion-dollar hacks to regulatory shifts and market chaos, crypto is never boring. Will better security and green solutions shape its future, or will scams and uncertainty keep it risky? Stay tuned for more insights in our next episode. Don't forget to follow Chain Train for the latest in crypto.